Let's take it across to Andrew Holland as well, who's joining us on the show to talk to us about what he makes of the fundamentals, the market fundamentals right now. Andrew, hi, good to be speaking with you. Let's begin by discussing the way mid caps have come back and the small caps too very, very strongly. So all that fear that we had in the month of March about the frothiness, valuation and a bit of a crackdown of the regulator seem to have completely ebbed away. Do you think we're in for another round of perhaps the selling pressure coming in, or do you think now there's only one way for the mid cap and small caps?
You're correct, and I think we spoke about it last time, was that, confidence came back to the market. And when confidence came back, some of those fears about, generally about mid caps and small caps have kind of ebbed away now. And we're back to the kind of normal fundamentals of the good stocks within each of those sectors, within that small and mid cap kind of category. We should continue to buy. I mean, as I said, when the small and mid caps were falling, is that, nothing had changed in the economy, nothing had changed to the outlook. Yes, valuations can be overheated, and we all know that. It's not just for small and mid caps, but sometimes for the larger companies as well. So I tend to less worry about, corrections on this. As long as you know your companies and your themes that you're playing, these are always good opportunities. So I think, if we're growing at a 7% GDP growth, then and the expectation that interest rates should fall at some point this year, small and mid caps is going to be continue to be a sector which I think you're going to make a lot of money from.
Andrew, in the month of March, there was there was a universal consensus that small and mid cap stocks are headed into some kind of a bubble and trouble. The view has changed now, but fundamentals and valuations, they still remain the same. So it's not your view, but in general, the view towards mid and small cap stocks, I think, is getting far more bullish than it was in the month of March. Why is that?
Because I think, as I said, we've gone through. I don't know if you want to call it a lack of confidence in terms of that what happened in the middle of March, but it's quickly come back. As I said, the fundamentals for a lot of these companies haven't changed. It goes back to what price you want to pay for a company, in terms of your PEs. Now, to my view, I look at these companies, whether it's a small or mid cap, depending on the sector, where they are within the sector, and try and fast forward. Where would this company be in 3 years in terms of profitability and revenues? And what would the PE be if I could have looked at it today, 3 years on? And if I get into a reasonable valuation, then I'll buy it. And I think that's the simple way of looking at some of these companies. Yes, you might be paying 100 times or 80 times or whatever it might be, but in 3 to 4 years' time, you're really buying it on a P of less than 20 because of the growth dynamics for that company and the sector that it was in.
Nuresh, Birla Group of companies, is this just the beginning, or they are now looking slightly extended after the recent bout of rally? I mean, suddenly these stocks, Nuresh, are up 15, 20, 25% in quick time.
So technically, the bias is very clear. The price action, the volumes is positive, and it's across the board. And it's been for quite some time. The consolidation was really large. A lot of these stocks were major underperformers. So if you look at even after the current move, ABFRL has been an underperformer for a long period of time. Idea, even before this, had gone up to 16, 18 rupees. Right now, it's a case of, after the oversubscription, it's a case of short covering. But when such events happen and price action goes across the group, we've seen good things can happen over the next 1 to 2 years. So technically, it seems like a trend change for the whole group. And there have been multiple events which have seen good price action. So we've seen announcements followed up by good price action. So a demerger in ABFRL led to a 10-15% gap up. AB Capital is at a new 52-week high. You have Century Textiles, which has outperformed. So overall, this could be the time where the sector could, the whole group could be outperforming over the next 1 to 2 years. So we'll keep watching out for dips as a buying opportunity.
Right, okay, a lot of buzzers out there. We'll continue discussing them, but after this very quick break.
All right, we are in for a good day of trade. Friday's low versus where we are right now. Kunal, Friday's low now, what is the importance of that? It appeared on Friday morning that things were looking bad, let me put it this way. On Friday morning, SGX was down 300 points. By the time we ended the day, we were up 100 points, which means we've added 300 points on Friday's low on Friday itself and another 200 points.
Another 300 points, yeah.
So from Friday's low, we are up 700 points.
Correct.
What does that mean?
So I think that indicates that a panic low is already now behind us for the index. That 22,700 mark was also a point where the index formed a double bottom. And in the month of March, when the mid caps were going through a sell-off mode, that was a time when the Nifty also retested that 21,700, 750 mark, and from there we saw 800 to 1,000 odd point bounce for the index. So what we've done is we've managed to protect those key supports of 21,750 for the Nifty approximately. This bounce and the comeback of the Nifty above the 50-day moving average, I think brings into place that we are now getting back into a retest of the previous highs. The first hurdle which I mentioned in the last couple of days back also is that 22,500 mark, which is a good round figure as well as a psychological number, and that generally in the expiry week we generally tend to see an expiry closer to these round figure numbers, because that's where these strikes become hub for option writers either on the call side and the put side respectively. So I think in that sense I would probably expect that over the next 1 or 2 days we may just try and come back to that 22,500 mark, but the real breakout could probably happen with the start of the May series.
Okay, we'll watch out for that May series and where it takes us. But in the interim, take a look at NBCC. That stock is flying away as the company has just informed exchanges about their performance in FY24. They say that the business secured touched 23,500 crores at a consolidated level, which is a growth of over 250% year on year. And the management commentary suggests that NBCC is well positioned to not only sustain but also incrementally elevate its growth trajectory, propelling sustainable development forward in India's construction and infrastructure landscape. So that stock is flying away in the trading session. And of course, the other one is BSE, which has surpassed the 3,000 mark for the first time. It's a bit of a breakout. We should pull up all of those graphics. We'll talk about how, the company has moved from the 1,000 rupee stock mark to 2,000 rupee mark. It took almost 400 sessions for the stock to move from 1 to 2,000. But from 2,000 to 3,000, it's just been 100 sessions. And the key milestone dates will also come up for you on the screen. It's been a very quick move as far as BSE is concerned in the last few months. What's your take, Nuresh, on these counters, NBCC as well as BSE, which are firing away?
So BSE has given a fresh breakout after taking a dip in March. The last high was 2,600. We've broken out above those levels. The last range was roughly 700, 800 points. So the target price comes to 3,400 as such. So technically, the stock is still positive. It's just that at current levels, the risk reward is not great. Similarly, CDSL has also broken out, so that looks a little more interesting relative to BSE. NBCC, the stock did a decent correction from 175 to 110, then bounced back to 140. Now, if it sustains above 135 levels, which was the gap down 3 days back, it could be a positive uptick towards back to 150 to 170. The longer term trend has been positive for NBCC, so buy at current levels as well.
That's the take coming in on NBCC, which has been quite the buzzer in trade. But Andrew, just wanted to get your sense in on, both the heavyweight numbers, Reliance as well as HDFC Bank clearly failed to impress the street. What's the takeaway?
Well, I'm not sure if they failed to impress. I think, from what I've seen of the numbers and all the brokers' reports, I mean, there was nothing, to get overly negative or overly positive about it. I think that's where, we've seen that the share price has just kind of drifted rather than doing anything else. But what it did bring is two things. One is stability, I think, for the banking sector a little bit in terms of maybe NIMs, the worst is behind us. And as in terms of Reliance, obviously, I think the focus is on the telecom side, and that's where you're seeing a lot of action. In the last week or so with the Vodafone issue as well. So I don't think the market's overly worried about these numbers. If anything, I just think there's no catalyst to move the share prices either significantly up or down, which is no bad thing for the market either.
So that's a view coming in terms of how the earnings have really stacked up in terms of the earnings season. Not really unimpressive as per Andrew. But Amara Raja Batteries, that one is doing very well. There's a 13% surge on that counter. And of course, Honasa is the other one which has been gaining ground, 8% higher. Remember, yesterday was the day when the company talked about how they've hit the mark of 500 crore for the Derma company brand. And today, of course, there were brokerage notes talking about that they like the fact that the company has been very agile and have been very mindful of the capital allocation. So those are a couple of big buzzes on the upside. But on the downside, Sun Pharma is coming under pressure. What exactly is the latest takeaway on the Dadra 483s that have come out? Let's take it across to Shrishti. Shrishti, how serious does it sound? Can this really escalate? And if yes, what could be the impact?
Well, yes, this could escalate is what Nuvama is looking out for and actually concerned about it, because Dadra unit is quite a critical unit for Sun Pharma, which recently was issued Form 483 with 6 observations. And this is a critical unit. Why so? Because one of the key drugs, that is G-Revlimid, is being manufactured in this particular plant, and Nuvama is not sure whether the company has a dual facility for filing this product or not. And the 6 observations, the details were already out, the kind of observations that were being done by US FDA, and they are a bit concerning. What Nuvama observation is that this plant has inadequate out of specific investigation, the equipment conditions with potential for microbial contamination, procedures issue in the quality unit as well as inadequate field alerts despite repeat customer complaints and inadequate check into the product quality complaints and inadequate examination of deviations as well. So a lot of product contamination reports were there, for which Sun Pharma was not able to actually go ahead and make these procedures having a good explanation for that, and that's why these observations were being done for the Dadra unit. And how Nuvama is looking at it is they are saying that if there's an escalation, it may risk the G-Revlimid sales in the US, and this could lead to 2.8% revenue cut and 7% EBITDA cut for their FY26 estimate. So that's Nuvama's take on this for FY26 revenue as well as EBITDA guidance. They would tweak it if these observations are going to go ahead with an escalation, but indeed a negative news flow for Sun Pharma, and that's why the stock is down close to 4% in trade. Back to you.
Thank you, Srishti. Autos are having a strong day. 2% higher for Tata Motors, 2% higher for Maruti, 1.5% higher for Eicher Motors. Naresh, we talk a lot about the Hero MotoCorp. We speak a lot about TVS and Tata Motors, but for me the star actually has been Eicher, Naresh. I think you spoke about it on Friday or Monday, I don't recall, but it is at an all-time high. Competition, lot of new launches in that space, so to speak, but Eicher right up there. It just doesn't matter what is happening with the portfolio of what competition is doing. Eicher is moving high irrespective of it.
So this has been a stock which I've been recommending for a week now. If you look at what happened with Eicher, is very similar to what happened with the other two-wheeler names. So we went through a consolidation for almost a year in Bajaj Auto. If you look at Bajaj Auto, the stock would trade between 3,000 to 4,000 for almost a year. Then when it broke out above 4,000 levels, it has gone into a trend. Same way, if you look at Hero MotoCorp, it traded between 2,200 to 3,000 for almost a year. And then when it broke out, it got into a rally. Similar range for Eicher Motors for the last 1 year was roughly closer to 3,000, 3,200 on the downside and 4,200 on the upside. In the last 1 week, the stock has broken out of that range. Also, from 2017, the stock did not give much return. The stock had topped out at 3,000 back in 2017. So finally, it seems like a big trending move which has started in Eicher Motors. And if we've seen the pattern continue with the other two-wheeler names, this could slowly and steadily head up higher over the next few months.
In Mahindra Finance, casualty today, a fraud of 150 crores. Is it tip of the iceberg? More is coming. How could there be a fraud? What happens to the entire risk management in place? These are questions which in a sense have prompted the company to delay their earning guidance or the earnings report. As a result, the stock is down by 5%. JLR has recalled 2,400 vehicles as passenger airbag may tear. What is this? I mean, you've given a car where the airbag is not working. And that's JLR.
And in the US.
And JLR, you would imagine, would be anywhere. But
it says US vehicles.
oh, is that US? Yeah,
Yeah.
US vehicles. Yeah. Okay. See, recalls happening with a lot of companies, and especially luxury cars. Luxury car makers have been recalling a lot of cars back. Volkswagen has done it. Tesla has done it. But what is interesting in the US market for me is, I'm keeping the JLR news aside, is that at a time when EV is becoming the dominant theme worldwide, in US hybrid is actually picking up now, and EV sales seems to be plateauing out, and that explains why the Tesla stock in this calendar year has taken a knock of nearly 35%. So it would be interesting to see that the entire ecosystem, where Tesla led a massive re-rating to just about everything, what happens now that the pivot stock, which is Tesla, has taken a backseat. Andrew, everybody is now excited about what's happening in the EV space, and India also, whether it is EV maker like Tata Motors, or electric two-wheeler maker like TVS, or EV component companies like Sonastar. Everybody is excited about owning something or the other in the EV supply chain or the EV chain. How are you placing your bets? Where are you picking your spots?
No, the point you made, Nikunj, is that is very important, is that you have seen a slowdown in EV sales, not just in the US, but Europe as well. I don't think it's, the story's over, so it's probably just a blip in the kind of longer term trend. But the way we're playing it here in India is through the components and suppliers, rather than trying to pick out which company or which auto company is going to be the big winner. I'm not seeing a Tesla type leader at the moment. Maybe that will emerge over the next 1 to 2 years. But I think the best way to play it is through the component side, those supplying all of the EV players in the market. And I think that I think will give you a better spread in terms of capturing the upside growth in the whole sector without trying to pick out a real winner in the auto sector.
Great to have you on the show. We'll let you go on that note. Thanks as always for joining in.
If you like this video, then like, share and subscribe to ET Now.